Hi dear traders, the market cheered the widely anticipated event on Thursday. The ECB raised the key policy rate higher than expected by 50 basis points at a time. European monetary authorities had to make this decision due to soaring inflation despite the recession risks and political jitters in European countries. The long-awaited rate hike encouraged the euro traders, and the single European currency regained some of earlier losses. Now let's discuss what events in the first half of the next week will influence financial markets. You are watching a video calendar on InstaForex TV channel. It's a common knowledge that an increase in interest rates affects business climate because of higher borrowing costs. On Monday, July 25, the IFO Institute for Economic Research will release a survey with a leading indicator for economic activity in Germany. Apart from high interest rates, German entrepreneurs are worried about the simmering energy crisis. Hence, they view their ongoing economic situation as unfavorable. German businesses are pessimistic about the outlook for business conditions in the second half of the year. The consensus suggests that the business climate index will go lower in July. In this context, the euro is expected to dip for a short while. On Tuesday, the market is set to trade quietly. The only report worthy of attention is new home sales in the US for June. Analysts suppose that buying activity in the housing market was moderate last month. Indeed, allowing for recession risks, Americans are unwilling to spend their savings on costly properties. The economic calendar contains more interesting news on Wednesday. In the early hours of the Asian-Pacific trade, Australia will report on its inflation. Like anywhere in the world, the Australian economy has been hurt by elevated consumer prices that have accelerated by the fastest pace since early 2000s. The Reserve Bank of Australia has to respond with monetary tightening. The key interest rate was increased by half a percentage point to 1.35%. At the meeting in July. The regulator is ready to go ahead with aggressive rate hikes in case of escalating inflationary pressure. Analysts predict further inflation growth in the second quarter, so traders will rush to buy the Australian-American dollar pair in the short term. During the European session, market participants will get to know the consumer climate survey in Germany. Experts at the GfK market research company recorded a dismal consumer sentiment index in the last report because of the sky-high cost of living and early signs of a recession on the back of looming energy and food crisis. No doubt that such alarming information will push the euro-dollar pair down. Later in the trading day on Wednesday, it makes sense to pay attention to durable goods orders in the US. The indicator sheds light on both foreign and domestic demand, giving a hint of further trend in the manufacturing sector. Until recently, reports have recorded decent readings. Nevertheless, analysts warn that the manufacturing sector is losing momentum and expect durable goods orders to dip by 0.2% amid rampant inflation and high interest rates. If the forecasts come true, we will see sell-offs in the US stock market. These are trends of the beginning of the next week. And let me remind you, we make our news reports for you every day. Subscribe to our channel to be always in touch with the latest events. See you soon.